Hi guys, Calls and Puts Lifestyle here. Today we have another video for you guys. This one's gonna be a bang. So what we're gonna talk about, I'm gonna do my strategy, which is the breakout strategy, and we're gonna talk about times and sells, level 2, how to chart out key levels. If you don't know these words, trust me, you know it by the end of the video. So just stay tuned. So as you can see, I switched from Robinhood to Thinkorswim, just simply because better charts, better execution. My orders get filled almost immediately. Yeah, let's see. So firstly, why do I use my strategy? So I use my strategy because when when price is in consolidation for you guys who don't know, so when price stays at the same level. So when price is in consolidation, IV decreases. IV is an expected move for the week. So when an expected move for the week decreases, contracts get cheaper. So when suddenly price breaks out the consolidation, IV suddenly spikes up, which means the contracts get more expensive. IV, which is expected move for the week, as I said before, the contracts spikes up, the contracts get more expensive, which means more profit overall. So yeah, so let's see what the strategy is. So firstly, what do I look at? So I want to chart out key levels of where price is consolidation at, the top of the range and the bottom of the range. So there are two different breakouts I use, and two different levels I chart out. Firstly, range breakout. So when price is consolidating in a range, which I'll show you in a second. So when price consolidates in a range, I want it to break out of the top of the range or the bottom of the range, which gives you for more profit overall. So yeah. So let's first look at our first example here. This happened quite recently. Yeah. So firstly, where did price consolidate in it? So price consolidated within here. See, consolidation stayed at the same level here. But the thing is, it went up and down, up and down. So firstly, we need to find out what the top of the range is, which is the highest level. Highest level is this candle right here, right there. Let's get our price level out, mark it. That's the top of the range. We need to chart at the bottom of the range, which is the smallest, which is the same candle, because you have to do the same candle when it comes. If the candle has is the highest point, you have to do the same candle bottom of the range. As you can see, within this range, price didn't break out, just kept on consolidating it inside of this range. Would I take this trade if it went to the downside? No. Why would I take this trade? So firstly, I'll go to higher time frame and chart out what am I seeing here. So I see that price has been in a big uptrend for the past, I don't know, few months, right? So I have a low of 140 and a high of 198. So price has been in a strong uptrend and is looking to continue to soar high. Hence, I'm not going to look at it to the upside, to the downside. Sorry. Go back to 1 hour. So what was I looking at here? So I wanted price to break out of this range, right? Because as I said, IV increases, contracts get more expensive, which means more profit. So what did I look at? And I didn't take this trade, by the way, on this candle. Why didn't I? I'll explain in a second. So I didn't take this trade with this candle because it didn't have enough volume. I didn't see it on the times and sells, which I also explained near the end of the video. So I waited for this candle to pull back. I waited for the next candle, and it ended up breaking out. I kept on waiting until the second candle, and I think I saw that 196. That's the number that I saw on my chart. Of course. Alright, so that's what I saw. I'll show you another example of a breakout. So we could go. I use the 1 hour or the 4 hour. Why do I use the 1 hour or the 4 hour? So I use the 1 hour or the 4 hour because you get the more consistent plays. And if you see a breakout on the 5 minute, you'll probably get a 50-cent move. So breakout on the 5 minute. So let's just say this is the 5 minute. It'll probably be like a 50-cent move. So look, I'll go to 5 minute and show you. And if you guys use the 1 minute, you'll probably get even a smaller move there. Yeah, you can't it's hard to find consistent plays, and they sometimes most likely don't break out. So yeah, you get more consistent plays on the 4 hour and the 1 hour. Let's look at the 4 hour. There's another consolidation breakout that happened a few weeks ago, right, on Google. Okay, so there's another breakout here. So this is not a range breakout. So what I'm gonna do here, I'm looking for price to bounce off a line, let's say imaginary line, either twice or more. So the line, I don't know if you guys can see it, right here. Right. So this is my line here. But the thing is, that's not just what I see. When I use this type of line, which is when the price, which is this called key level, when the price bounces off this key level twice or more, I want to find another level, which is called the psychological level, and I want it to break out of this psychological level. Why? Range breakouts are more effective. They're more consistent. But when I backtest the strategy, I saw that when it comes to key level breakouts, it would have to break out the psychological level for it to have a strong breakout and for it to not pull back to your stop loss. So for you guys who don't know, psychology level is a round number, 185, 190, 195, where price normally consolidates off of and then breaks out. So we could just the closest psychological level is 185. We'll mark out here. We want to make it exact so that in the trade it'll be easier. Right. So this is the 185 level. So I wanted to break out the 185 level, get enough volume for it to break out. I want to see on the times of sales. I want to see it have enough volume, have enough momentum for it to break out. So yeah. And I'll have another video about momentum soon. So what I see here, this candle breaks out, so I enter 185, just around, and then this price, it dropped down. So this was a really long trade that happened. So it went down. My stop loss was around 183, which is quite a low stop loss. For my target was around 188, I think. So it went to my stop loss and it rallied up, and I went out around here. It wasn't a scalp because I was looking to scalp it, but I saw that it didn't have enough volume and it just was so close to my stop loss. So I took it for a rally, quite a long rally actually. Each candle's 4 hours, so I think that was quite a long trade. Yeah, I just had alerts of things where you could like move away from your monitor and still take a trade. So yeah, I'll show you one more example on Google. The thing is with Google, the breakouts are like a $1 to $2 move, but other ones like Tesla are $2 to even $10 moves. Well, how do I know this? I know this because when you backtest, you want to see previous breakouts and what is the average move. The average move for Google is around $1 to $2, Apple $2 to $7, Tesla $2 to $10, right? So okay, let's look at another one. This one is a range breakout. Top of the range here, and then as we can see, we have to mark out the bottom of the range as the same candle. But if problem with is this, Google's been really strong lately, so I'm not gonna take it. So we can remove this. Right. So it broke out, pulled back. This candle didn't have enough volume, but then it peaked at 181. I took it around 181, right? And I also marked out the psychology level, which was at 180. As you guys know, round numbers. The thing is, Apple, you can get a little lucky with Apple, right? Because like the psychological levels are $2.50 every $2.50. So that'll be 175.50, 175.50, like yeah. And it's like 175, 177.50, 180. So it goes up in $2.50. So I took it around 181 because there was a key level at 181 there. So let's go to Apple. Let's see what I'm looking at from Apple. So Apple's a little bit it's in the middle. It has strong breakouts. For example, $2.50. So this is another move I'm looking for. Apple to 215 level. It didn't actually hit. So that wasn't really a breakout. So as you can see, there's a level here at 205 that I marked out. This is a range because this is top of the range and this is the bottom of the range. But at the same time, Apple is being really strong lately. Rallied all the way up. No, it's not its peak. Of a high of 216. So yeah. So I took this trade. I think it was at 207.50. Why did I take the trade at 207.50 and not at this key level? Firstly, when it comes to Apple, the range breakouts aren't too consistent. The range breakouts with Google are consistent. The range breakouts with Apple are not. So when this broke out of this level, I waited for 207.50 because Apple breakouts are $2 to $7 move, and I had enough momentum for it to go. I think it peaked at 214, but I only took the trade if we go to 1 hour. That's what I'm looking at. Let's go to the level. Where is it? Oh yeah, as you can see here, peaked at. I took it on this candle. 313 level ish. So that was a. Oh, sorry. That was a $3 move there. We'll go to 4 hour. Yeah. I think I took around here 206. So that was no, not 206. Sorry. 209. That was the number that I remember seeing. 209, 210, I think. So yeah. Let's go to Tesla. So Tesla likes to have big breakouts, but Tesla likes to consolidate for a longer time than other stocks. Look, on the 4 hour, Tesla. So what does Tesla normally do when it comes to breakouts? Tesla normally has one candle that peaks high. So this is a range breakout. Actually, this could be a range breakout / key level breakout. So it bounced the level once. You can say this is twice. Let's zoom in here. Once, you can say this twice, and 3 times here. Then it suddenly broke out. So 340. I took it around 340. We always have to mark out our psychological levels. 340. That is 340 level. The good thing about this trading is when you mark out the levels on a 5 minute, you get less profit. But if I'm marking out the levels on a 4 hour, you still get more profit. And you're still scalping, because sometimes I normally take the trades on Tesla, it's only a 1 candle. That's normally it's a 1 hour trade. So you're still scalping, that's day trading, right? You're not swing trading, even though it's on a 4 hour. Because when you look at the bigger time frames, it's a bigger picture, right? Yeah. So now I'll explain what is a times and sells and what is a level 2. So level 2, and this is times and sells here. Level 2, times sells. So there's different colors on the times and sells. Green and red. Green means that the buyers and the sellers are executing at the bid. What is the bid? The bid is the highest point that the buyers and sellers will execute at. Execute is either buy or sell. Yeah. The ask is the lowest point where buyers and sellers will execute at or buy or sell at, right? So, if I want to look at it to the upside, that means I want to see more green than red. That means that if I see green, that means that the buyers are being really aggressive in the market and overtaking the sellers, right? And if I want to look at to the downside, I want to see that the sellers are overtaking the buyers, right? And this is level 2 here, bid and the ask, and these are the different orders that are being sat at in the level 2. So this, it doesn't really matter to me, so that's one last thing you could look at. So these are the numbers right here. So I want to look at walls. What are walls? I want to see that my key level, let's just say my key level on Tesla was 336.60. I want to see that 336.60 on here. So since Tesla is quite far away from the level, you're not going to be able to see 336.60. So let's just say this. There's 5 orders. These are how many orders. You want to time this by 100 because you always want to time things by 100 when it comes to options normally. So 100, 200, 100, 100, 300, 300, 100, 100, right? So I want to see, let's just say 5 to 10 orders there, I want to see my key level at 336.60. So I could see 336.70, and that'll still be a level for me. That'll still mean that my key level is validated. So basically, if your key level is a wall, that just means that your key level is validated, which is means a strong sign that's gonna break out. You still want to go to your psychological level, right? So if my I want to see 336.60, 336.70, 336.50, anything around that level. I want to see 5 to 10. So I want to see 5, 6, 7, 8, 9, 10. I want to see like either one of those, right? You tagged up by 100, 500, 600 orders. That means that 500 orders are being sat there. I want to see that if it breaks out of this wall, key level, my key level validated. I want it to go back to my psychological level. I want to break it. So summary of all this, I want the two different breakout strategies I use: range breakouts and key level breakouts. I want it to break out of my key level, and I want it to break out of my psychological level as well, round numbers. And yeah, I'll take it if it has enough volume. If I see on the times of sales, which I explained, and the level 2. So yeah, thank you guys. Calls and Pistols Lifestyle here, and we have many interesting things to come, as you guys know. Thank you. Bye.